Thursday, May 8th, market analysis, Stan Ehrlich. Good morning, a little late, 10:07 a.m. California time. So let's get to it. We start out with the stock market indexes and go to the futures markets. I got some very interesting stuff happening in the stocks that I'm monitoring, in particular this morning. You're going to want to wait to that or jump to it, whatever. So we have a new high in the stock market indexes for this rally ever since the lows that were made generally April 7th and 9th. Those are the days that I also got the bullish engulfing ER buy signals at the bottom. In this particular case, the E-mini. It was on the 9th, I believe, in a Wednesday. Yep. So the signal is actually working better than I expected. The rally now in new high ground is acting good. I have to expect at this point that we're going to move up to challenge the highs that were March 24th, give or take a day or so, March 25th, which is the ballpark price of 58.35-ish. And if we can do that very quickly, faster the better, we will probably get overbought. It will look like exhaustion strength up to another resistance area and previous important highs, and a fairly substantial resistance area as well, not to be ignored in this particular case. Pretty profound. We got a bunch of highs here. We got some lows that are close, not quite, right on the support, up against the resistance, and through it and then back down again. And that goes all the way back to July. So it's pretty good. The way to get overbought is to move up quickly. Right into a resistance area would meet my criteria beautifully. Then another bearish engulfing red bar next week would be idealistic. Next. Oh, and we can't close today. It would be bad news. Below the previous rally highs, which we're approximately at the moment. And not to ignore the fact that we're up about 8 points, which is pretty good already. But volatility on the average has increased a lot in the last several weeks. So maybe it'll be 10, 12, 14, 15. I don't know. That would be more constructive and get closer, obviously, to that major resistance. The 1 minute chart, we're dipping back down a little bit at the moment. Can't come up with anything other than a minor dip. And then possibly, I think, probably new highs by the end of the day. Just my opinion. Next, Spider. Pretty much the same commentary, new highs up against the previous old bear trend line, a little bit more interesting, but still has a ways to go to get to its really significant resistance area, and that's going to be the 576, maybe even a touch higher. I should extend that to the right as well. Okay. Yeah, that's even a hair better. I'm going to say 580. Next. We got the 1 minute chart. What did you expect? Next, same thing. QQQ. New highs, high and last almost. Very strong, but against a minor resistance, a previous high made on March 25th. But I still think that's going to get broken, and we're going to move up to this major resistance area with a variety of tops and bottoms over a long, long time, July of last year. And that would be 500 next. And the QQQ 1 minute chart dipping a little. So almost high and last. NASDAQ above previous rally highs, getting close to one modest resistance area. But again, I think the more profound one is at higher levels, up to about 209. And that's where we're going to those higher ones, in my opinion, at this point. I have to watch carefully for any kind of false upside breakouts, bearish engulfings, any particular indicator that would tell me the market's going to stall out or even worse, come down a lot. I don't see it. So far, so good to the upside, which is different than what I was basically staying last several days. Not in tuned. And NASDAQ, minor dip. And the YM, new high ground, totally. Not any particular resistance area close by. I'm looking for more likely than not a move up to 42.55.70. Yeah. And the YM 1 minute, a little bit of a dip at the moment. Not a problem. Normal, it looks like. Next, we've got Russell New high grounds also. What can I say? Everybody. So resistance area above the market, extremely important, profound. Again, let's just get there relatively quickly. That's what I'd like to see. Get overbought conditions in a variety of indexes, maybe all of them. And the 1 minute chart on the Russell. Now, bonds falling back quite a bit. Not going back up into the resistance area that it simply stopped dead at yesterday and this morning, and now below yesterday's lows and close to the lowest lows for a couple of weeks. Then we're going to see more likely than not 112.23-ish, and I'm not going to be at all surprised around 11.20. So my downside objective at this particular point is 111.20. If we get there relatively quickly, we could get oversold. Nice. And a long-term bull trend line is just slightly lower. Notes, same kind of comment. This long-term double bottom formation still stands. That doesn't change anything, both in bonds and in particular in notes, which is a better looking one. So coming back down to test 109.09 doesn't look out of the question. A lot of support here at 110.14, but we won't even be close to oversold. So I'm really expecting that to get broken. 109.09, downside objective. Crude, slightly lower than yesterday's lows and coming back very nicely. You realize this would well be in the new high closing ground for the last week and very close to a new high for the last week, but not quite the new high. So it's looking pretty good. Rally back up to resistance again. At this point, it certainly looks likely 61.50. And if we can get into that area, we just might even get to the top of it like just a little while ago, 64.60, 64.50 something. We have a bullish engulfing today, brand new, heating oil. This looks pretty good. We were oversold a few days ago, tested support area, turned around, and all of a sudden today, boom, green, outside up day, bullish engulfing. I do have a custom RSI, remember that, and we also have a modestly customized bullish engulfing, but it qualifies. Looking very strong. Wouldn't be surprised if it got stronger by the end of the day, by the close. And now at least I'm looking for a move back up to 1.12-ish, and I won't rule out anything higher than that. That looks like it's very reachable. The next major stopping point on the upside should be around 2.225, something like that. Then the high there, 2.3, and then of course these tops. Next, natural gas, holding, not particularly rallying, but at least staying put, essentially. Did get a higher high today than yesterday, and the low is higher than yesterday's low, but we're fiddling around. Move is up lately. Got oversold, turned around just after a minimum downside objective was reached from a head and shoulder top formation that was back in February 21 through March 19, a 1 month pattern. Worked great. I held your hand all the way through that. So I'm looking for steady to higher, probably higher pretty quickly. And we have a bearish engulfing gold today. We're not overbought, therefore it did not turn red like this one did because it had been overbought within the allotted back number of days. So I think we're about to hit new lows again. Below anyway, I'm at 32.10. And now it reinforces my expectation I've been talking about now and then down to 3,000. Yep, I think we're about to go down to 3,000. Next, silver. Dipping off quite a bit, staying below yesterday's low, which was a pretty big up day, and the low was higher than the previous close. We're still in this support and resistance zone. Today's low is right there at the bottom of the support, bottom of the zone. So closing below today's low, excuse me, should cause it to have more downside momentum, start to make new lows below 31.86. And then the support area down here should get tested. I'm looking for 31 to 30.50. Next, platinum. doji inside day, but no upside breakout, and it flipped back down. Now, there is fairly good support. Look how many times it bottomed out in a relatively small price range down here. So, anything between 963.30 down to approximately 954.30 has created support. I should put a little zone in there, but I didn't. A little bit bigger and much, much, much more profound long term has been this range of a little under 950 down to about 930-ish. Whenever we go below 930, it didn't stay there, got oversold, bullish engulfings, a couple of times, oversold. So yeah, 930 is highly likely to be the bottom unless it's going to get very bearish long term. So I'm looking for at least 950 to 930. Next, we've got high-grade copper. Looks like a possible new low close. Chipped out a piece of the bottom of the support area, but it basically held. I don't know. I'm going to have to wait here. Support's hanging in there. Not oversold. Pretty neutral. Basic move like these, trending lower, high, lower high, possible lower high. We had a nice bottom, got a great buy signal down there. I'm going to wait another couple of days or whatever I need to wait. Next, soybeans are just barely hanging on through a thread here. Looks like it could close around unchanged, or a little higher, a little lower, but at least it's not making new lows yet. If it gets below 1035, it looks like, it could fall apart pretty quickly and begin to jeopardize. What I really don't want to do is get too close to my last shoulder low. I've already got one pattern that's now off the books, corn. So we'll get to that in a second. Beans, I hope it holds and turns up. Not very optimistic about it at the moment. New low, a new short sale stops. You might consider just around these new lows, 1035-ish. If you get short in that ballpark area, obviously instantaneously put yourself in a protective buy stop position. I don't know, take a risk of whatever you're used to, but put that stop in for sure. Always use some sort, hopefully good, money management. Absolutely. Emphatically. So I got to have a turnaround immediately, or I'm going to turn a little bit bearish here for another dip down. Okay, soybean oil is hanging in there. Today's low is just one tick, I believe, above yesterday's low and almost close. So it's popping back up, but not really enough to do anything. It's a doji. I'm not particularly impressed. It's not oversold yet. No reason to turn up. I ain't got no support. I don't know. I think this could also start to dribble down a little bit more. If it doesn't and starts to make new highs, we do have a breakout of a double shoulder, head and shoulder bottom I've been talking about for months and months. I just got to have it hold. And it has not been for the last couple of days. Next, we do have soybean meal holding, but not obviously very aggressively or convincingly. This could be the second, maybe lowest close for the trend down for the last few weeks. Resistance has stopped the rally. This does not look like it's going to hold. I wished I could say better. I think it's about to challenge 290-ish, and anything below that is going to create another step down on this staircase. Staircase. Next, corn didn't hold. Yesterday it got below, stayed below, closed below, a little below previous lows since February, March. And that's actually since November, December, or close to it. So today it said, oh yeah, I'm going down big time. We're now down another 22. Way in a new low ground for several months, for I think the year. Yeah, absolutely. This is a new low for the year plus maybe a month, or even more than that maybe. Yeah, I have to say it's the lowest prices that we hit today since early November. I expected this double bottom to hold. It didn't. We are oversold. It doesn't guarantee you're about to turn back up again. It only means you're fairly likely to. But now what? This is definitely a downside breakout at this particular point, unless for some crazy reason it just reverses like nuts and goes back up above these two previous lows. Not likely. So now I could expect a little bit more lower, but then the rally should stop at around 450 and then turn down to new lows again. That is going to continue to kill my head and shoulder bottom idea. The timing was pretty good for this timing point, early March. The double bottom didn't bother me too much, and it did break out to the upside. That reversal pattern did work. I don't know. I'm disappointed. I guess we're going to see lower levels. I know where it should stop on rallies and how it should generally act. Next, wheat. Also not doing very good at all. Now, yes, there's still a chance that that low on April 30th, which is still the lowest low, could be a major long-term bottom, but it's looking a lot less likely. We have a little bit of a downside breakout. We have a new low for about a week, and we're very close to those previous lows. It possibly could turn into a double bottom. I don't know. We'll have to see. Predicting those things in advance is not, the odds are not good. Okay, so, I'm losing faith. Cattle, overbought, new high for the move, but we're still overbought and we're languishing below previous rally highs, all three of them at the moment. So if we stay here or go down a little bit more, this could be a false breakout or what we would call a bear trap, same thing. And if it did go down a lot, we would have a bearish engulfing if it got below yesterday's lows, but we don't at this point. Next, hogs. New lows to move down. And closing, well, not closing, we're still holding just slightly above previous lows. I'll make the same statement, but it's on the bullish side instead of the bearish. But we have a lot of resistance a little higher, so I don't see it working. I think we're breaking out to the downside. I'm looking for a move down to probably 93.20-ish. Next. Okay, we got the four stocks, and this is going to be some unusual stuff. Shell is not necessarily unusual. This is just a little higher on the day. And we did get a bullish engulfing on the exact low day, April 9th. And it has rallied nicely and worked really well. So I can't really garnish anything from today's activity. Neutral to friendly. Looking for another rally up to 67.04. But we should hold no lower than 64 on any kind of a dip. Closing below 64 is probably going to finish off this gap closure. And that's a worrisome situation at 63.43-ish. The exact number would be 63.43 to the tick. And that is still not out of the question. But what happens if it jab down there, close the gap, and pop back up again above support? That's quite constructive. That would be really good. So any kind of a dip down to close the gap is not out of the question, but I just can't figure out at the moment if it's going to make those rally high attempts first and not close the gap. Gaps are almost always closed. Next, we do have Apple. A little bit of a rally today. Not much. Slightly above yesterday's high. We did hold at support. It did come down and close the old gap that I have marked on the chart for weeks. Now I can push this back to here. That job has been done. It's a little too high. And great. Actually, excellent. So your bids should have been just a little bit above the closure of the gap. That's the traditional price level. Maybe too many people are there. Sometimes a little below the gap and sometimes a little stronger than, right at the bottom of the gap. But anyway, it worked. So closed with a profit yesterday in theory, and it's rallying more today without giving you any major problems. Looking good. Now what? Well, that old gap has been closed also, but this gap has not been closed, and it is up to 209. 209 is good enough. And I do think there's a good chance that that is going to happen, in which case, hey, we have a possible head and shoulder bottom. This low on April 13th, March 8th, March 13th, I think is a possible shoulder low. Just a moment. Let's do this for you guys right here live on stage, and then copy it twice and drag it down. Oh, didn't want to do that. Stop that. Come on, go away. All right, I want to move it. Oh, let me get this. Sorry about. Oh, I'm goofing up. All right, so. All right, ladies and gentlemen, I'm sorry. This is the first shoulder low. This is the bottom of the formation down here. The head of the formation is on August 8th, and if you measure the distance from the shoulder low to the head, you come out with 2 days ago. The price levels are okay because remember, a downward slanted neckline, especially sharper downward ones like this, and if you put a parallel line from the first shoulder like that, you should be in. You could be. Not necessarily should. And the ballpark, so you get a time and you get a price level. So I would have forecasted right about here 2 days ago and 190, 189.50. So I got yesterday at 193 and 20. Let's move this back to where it should be. And the minimum upside objective for this pattern, guess what? It's all the way up to 260, 280-ish or higher. So, do we have a last shoulder low? Maybe. It looks pretty possible. I'd just love to see that develop correctly. So we are talking about 1 day after the bottom, if this develops correctly. Now, obviously, it could go sideways a little bit. No, it shouldn't make any new lows at all. And yes, up faster, quicker, better. That's actually exactly what I'm hoping for. Next, what do we got in Tesla? We got a gap up. Don't forget about the gap. It's not that big, but it's a gap. So in the next few days, maybe after testing a little resistance here, again, we come back down to a low, I don't know, to a little below 280. Don't totally forget about the gap down here at 242-ish. It doesn't look likely at the moment, but as soon as you start closing below 269.5, all of a sudden it's going to look real likely. So that's the downside breakout, about 270-ish. Yeah, that's about right. And there's a gap to close a little lower. So if you come down and close the gap, don't expect any follow through unless you're looking for this gap to get closed. I'll move that over a little bit over there. Next, we got maybe, I talked about this the last week or so, head and shoulder top forming in Carvana. It ain't happening. We have a upside possible exhaustion gap, but a gap not to be forgotten. And I am going to stretch this out a bit and also put in for you this little marker. Just look like that. That's good enough for the moment. So there's your gap. We are right smack dab up against these previous highs and even made a higher high. So is this an upside breakout? The gap says, watch out, maybe a false gap, false breakout, I meant. We'll see what happens by the close. Closing below previous tops, not good. Above, good. But the gap says if we come back to support, which we normally would, it's going to break down a little bit further, maybe close the gap and then go into new high ground. That, excuse me, that's what I'm looking for. Next, back to the E-mini. Looks like it's hanging in there pretty good. Yep. You have a great day and profitable trading to you.